So, inventory financing is one of the most common uses of the bank on yourself strategy in business. E-commerce business owners like Steve prepare all year for the fourth quarter, the busiest time of the year. Now, when I first met Steve, he was like many of his competitors, constantly on the hamster wheel of relying on lines of credit, such as credit cards and home equity lines, in order to buy as much inventory as possible. He wanted a big pile of inventory to sell for the holiday season and the Q4 rush, and he was stressed about all the inventory he had bought for the holidays. His hope was that the inventory would sell fast enough for him to pay off all of his credit cards and other lines of credit before too much interest had accumulated, and hopefully, make a little profit in this business as well. Unfortunately, each year, in order to pay off his debts, Steve had to put his inventory on significant discount in the early days of January after the holiday season due to overstocking. He bought too much stuff, and that was all these discounts were cutting into his margins. So these deep discounted Q1 discounts on his inventory was cutting into his profit. But what could he do? The debt had to be paid. Some of these loans, guys, he was taking was approaching loan shark levels, 40% for one, or with a merchant cash advance he had, even up to 288% APR on borrowing his money. So he could simply not afford to delay selling his inventory. So what did he do? He had to do what all his competitors were doing, the oh-so-average way of doing it. He had to lower his prices to almost any cost to get that stuff off the books and pay off his debts. So when he found Bank on Yourself, he was just barely making a profit in his business, and he was stressed out of his mind. He felt like he was running his business for the benefit of the banker, not for himself. So when he discovered how Bank on Yourself could work, he was thrilled. There was a noticeable sigh of relief on the other end of the phone as I described how he could access his cash value and use it to make inventory purchases. So borrowing against the cash value would allow his cash value to continue to grow and earn interest as if he hadn't touched a dime of the money. The money in his policy would then be liquid in his checking account for making inventory purchases. And the best part to him was that there was no required repayment plan on his policy loan. So this allowed him to sell his inventory and pay off his policy loan whenever he needed. Next summer, next year, that allowed him the flexibility that gave him the chance to sell his inventory at full price rather than deeply discounting to hurry up and pay off his credit cards and other banksters, breathing down his neck. So to Steve, his Bank on Yourself policy has helped him take back control of his business and kick his bankers to the curb.